And we're live.
All right. Good afternoon, everybody, and welcome to the Bookmap Academy meeting. So we do this every Thursday, and we go through your trades, all the Academy members. We highlight specific trades and give coaching and feedback on their trading activity. We and That's what we do in the Academy. You can anyone can join. You will need to have Bookmap. Just go to bookmap.com, click on the More button here, and then go to Bookmap Academy. And then you'll see the process, and here you can get Bookmap for free if you go through this process. And you'll just get a lot of coaching, which you can also become a coach. You can also become a streamer uh, in in uh, in our community. So it's all there in front of you. So yeah, go for it. Bookmap.com/academy. Let's go through the disclosures, and then we'll jump in here. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so we're going to go over a lot of the crypto competition, the March Madness crypto competition that we just ended, end of March there, and lessons learned, etc. But first, we're going to start off with Jack, and he's going to go through and give some feedback on our one of our new members in here. Hold on a minute, if I've got the right one up. Yeah. Okay. Okay. So
Yep.
is this it?
Yes, sir.
All right.
So
All right.
this is Veilfan. Yeah, if you want to follow him on Twitter, you can do that right there. But let's scroll down to that bigger image there.
Hold on a minute. Sorry.
It's okay. Veilfan is one of our few equities traders. It's really great to see him. He's basically one of three that I know of, myself, Caesar, and himself. So it's always great to see another equities trader kind of in the mix. David does do some stuff with some equities and stuff, but he doesn't necessarily focus his content on that as much. So one of the great things here that we see is we can see that he's looking at some higher time frame setups, and we can see that overall he's looking at two specific time frames: the 5-minute time frame and the 1-minute time frame over there on the left. And we see his trade executions there in IB. But what we're really lacking here from like just a journaling perspective as a whole, and this is something that almost every new member kind of struggles with, is that there's really no clear annotations onto what you're doing and why you're looking at this. And the reason why these things are kind of important is because, well, they're actually very important, is because you're going to grow as a trader. The trader you are today is not the trader you're going to be in 6 months or a year. You're going to continuously refine and edit your strategies. And what you're looking at now may be foreign to you 6 months from now or a year from now. So it's really great to kind of add some of these annotations in there. Now, I have a very good understanding of what he's doing here, so I can kind of annotate and do some of this. And that's what I did with some of the annotations in Bookmap. Those were not there ahead of time. What we're looking at here is essentially a lot like pivot styles. So you might hear of Camarilla pivot points or your different S levels. It's also very synonymous with support and resistance levels, these kinds of concepts. And what we see without the annotations was you can see his long entry there in the 5-minute time frame on the bottom left. And if we look at Bookmap at that same time, we can see a rejection of that order book liquidity at that bottom left rectangle, giving him that confluence for that entry there. And we can see that he went long essentially at that yellow triangle. It broke above, came back, and rejected that next level of liquidity that we see in Bookmap. Now, this is why Bookmap can be a very, actually higher there, Bruce. This is why we can actually see why Bookmap can really help solidify these things, is because once we know that it's rejecting that liquidity, we can see price potentially pushing higher. We can add in an entry here. And that's exactly what Veilfan does. He ends up scaling into his entry here and taking profit as he gets a rejection off his VWAP, which is that purple line there. Now, similarly with other traders that we see kind of joining the academy, they present their information all in one screen, but when they do so, they condense their information into very, very tight timeframes. And it can be very difficult to see some of the nuances that you might have been looking at while you were actually trading. So what I recommend for Veilfan here is not just increase your annotations and really describe what you're doing. You don't necessarily need to do it on the images. You can do it directly in the text. I do that as well. But I would recommend making Bookmap a large image as well as your 1 and 5 minute images, and just have 2 or 3 images. If you want to make one giant image, that's totally fine. But you really want to be able to see that nuanced information, because again, as you come back to these 6 months, a year, 18 months from now, you can really start to see things as you get used to using your different tools, because that experience is just going to gain a little bit more nuance. Now, again, none of those annotations were in Bookmap when Veilfan posted. You can see that in the Twitter above. I put those annotations there because I know what he's looking at and I know what he's looking for in these specific cases. And when you're trying to share this content, you really want to express that stuff, because you'll get feedback, you'll get questions. And with those questions and that back and forth conversation that you can generate with content, you'll solidify your process and you'll really help out with that overall psyche type stuff. Now, this is essentially a mean reversion trade. I have been very against mean reversion trades in general without confluence. When I say without confluence, what I'm saying is without the stuff that you see here. You can see that he's looking at those higher time frame levels. He's looking at those pivot points. He has a bias as price reaches and rejects these levels. This is a great concept for a mean reversion trade, as opposed to just if VPOC migrates or if VWAP is rejected and things like that. You want a bias before you enter a trade, because at that point, when a trade violates your bias, you know to exit. That's where your exit is, when your trade conditions are no longer confluent with your entry conditions. So these are important concepts, and this is a great example of a mean reversion style trade, looking for a trend to break back. And he executed excellent risk management, which is something Bruce and I have harped on trying to see. And we can see that his executions are right here in there. So really great content from Veilfan. A couple of really good things that he can improve on as he moves forward. But I'm really proud to see what he's got, and I hope that we can see some iteration on this. That's pretty much most of what I had for him. If you want to see that information, I'll post the Notion in the Discord, and you can read the more detailed information there. FSP, I'll link it in the Bookmap Academy so you can see it.
Veilfan, are you here? Are you in the chat?
It doesn't look like he is at the minute.
He's not in the chat, no.
Okay.
I did ping him to let him know that I was covering him today, but
okay,
it's okay.
Yeah, it's too bad. I mean, because there is a lot of trading activity going on in here.
It's really great. It's really great partial taking and really great scaling in. It's something that you and I have talked about a lot of times, and we could see the executions here, which is fantastic.
Yeah,
really
exactly. And I would have a lot of kind of questions on some of the decision making, and not that it's questionable. I just wanted clarification.
Yeah, based on so I went through all of his content, so I have a really good mental picture of exactly what he's looking for and stuff. And he's really looking for those pivot lines to see the rejection in Bookmap and the liquidity. And once he gets it, he either scales in his entry or scales out his entry, depending on whether it's for or against him, right? It's really, really good execution and risk management. And I really think that is a great example of how to trade equities. One of the other things I highlighted in his in the text form that you can see in the Notion file is he does something, and he did this on his own. If you want to trade equities, in my opinion, you need to go to the 20-cent increments for a lot of these equities. And you can see that on the far right on Bookmap. He's at that 20-cent increment. And the reason being is those psychological levels really are really impactful within equities. And we see a lot of people take profit at dollar increments, so you can fade those entries and feather your exits or entries based on that kind of content at those levels. Instead of going directly to that $0.25 increment, you can be at the 20-cent increment, or you can be just past it if you want to kind of wait for an entry. So 60 cents if you're waiting for a rejection. And we can see those, and that's where I lined up those yellow and red circles, is they line up directly at those levels. So it was really great to see, because it's something that I've executed as well many times. So
yeah, great. So let's see.
And that was the bulk for the non-crypto stuff.
Right. Yeah, exactly. Okay, so let's see. David, do you have any comments on this? Just kind of curious.
No, it's a great chart, great trade, and I'd just echo what Jack has said, looking for confluence and so forth, and usual line about other systems and so forth. But yeah, nice to see equities being traded for sure.
I'm really curious if he uses some external tools too, David. That was kind of something I wanted to reach out to him and ask him.
Yeah.
If he's using some order flow, or if he's using any other confluence to his pivot points, or is he just using raw pivot points, which there's nothing wrong with. It's just, I'm curious, like it's a very thought-provoking image for equities traders, right?
Yes, it is. And I don't know if you're referring to me as the David Iran, Jack, but
yeah. You're my David, dude. You're it.
That's good. Cheers, buddy. I often, you've heard me type at times that I should trade equities a little bit more. I say I find them a bit simpler. I mean that really respectfully. There's less to worry about, I find, on equities compared to futures.
Especially when you're trading the mega caps, like this is an AMD trade. If you're stuck with AMD for a little while, there's a lot of opportunities for risk management and cost basis reduction, because you're not using that leverage of like an in-queue futures contract, right? So,
you're not. And at the end of the day, you can still, particularly if you're going long, you can still hold the stocks.
Exactly. and it's a mega cap growth stock, so holding it is not necessarily a terrible thing. Yeah. So
now the short can be a little bit different, but if you're going long, hey, what the hell,
Yeah, exactly. Like, I mean, you might get stuck with it for a little while, but a down day today could be rough, but
yes. Yeah.
So, but you've always got calls on the other end that you can sell to reduce those bases and other things. So that's a good kind of segue into those kinds of concepts. Actually, Caesar. So I sold puts at 520. My premium was 519 and some change, I think. So it's one of those days where tomorrow I'll be looking for like a little bit of a bounce, selling calls, because I'll get assigned on SPY with 2 lots. So today is one of those days where you just kind of got to look at the markets in general. I'll post a trade for that later today. But that's the full Notion file. That'll be linked in the Academy. With that file, you can also look at some of the others that we have. So if you want to look back at other content, you can always ping us, or you can just scroll up and see the Notions. And that'll be posted in just a moment. That's all I had, though.
Okay. All right. Valley fan. And thank you, Jack.
Yes, sir.
So yeah, let's move on to so Stephen. We had Stephen on regarding the crypto competition. Last week we had Stephen on the mic and went through some trades just to bring it up here, just to give some idea. Stephen, it's been really great to see his progress in the academy. I mean, he started off like I don't have an image of where he started off, but there was a lot on his chart, and then he took that and has whittled it down into looking at something very specific. And then in terms of his performance in the competition, we may consider doing this a special award next time for our next competition. Look what he's trading here. So Dark Trader is the winner here, overall P&L. And then Tornado, and then Demo Trader. This is Steven. But look at how much volume they're trading. Okay, he traded 84 coins altogether and reach this performance. That's really, really commendable and really great to see. It's by far it's one of the lowest on the chart here, except for like I think Dario down here. He went in all short and covered all short. That was it,
I did the same. I was running short strategies and long strategies at the same time, but you can only have one entry, so I mapped the longs and did the shorts.
Yeah. So he was consistent. We would like to have like we're day traders. So, here in the States, like a pattern day trader by the IRS means, and they kind of loosely define it as consistent and frequent. And you need to meet that. If you don't, you cannot be a pattern day trader. So by the IRS. So anyway, let's move on. Well, Stephen, the mic is open. We had you last time, so I thought what we'd do this time is go over two other high performers in here, Stan, and then Slowdown. I don't know which one you are in here, but anyway, doesn't matter. We can. We'll just. You participated. You had really great content. You won the content award on March 26th with best content, and then Stephen won it. So he won third place and best content for April 2nd. So would love to hear from you guys. And slow down. I guess we'll start with you. It might be best.
Sure. Hello, can you hear me?
Yes. How are you?
Doing pretty well.
And I mean, I'm just throwing you on the spot. So this is more of an open discussion, and maybe I'll just open it up. Like some of the things I learned from this competition. One of my kind of fortes is lower time frame trading. You really couldn't do it in this competition. Because there was this was the first time we had introduced commissions. So you've got to widen it out, and you've got to look for a much bigger opportunity. And if you don't, you get nailed pretty quickly. Anyway, there's that. There's also, like we covered in the webinars a few times, like these markets are pretty crazy. Like the BTC, USDT, it moves a lot. It will stop people out and then move right back and then continue the other way. So it's not as kind of, I think it's trickier and more challenging than some of the futures markets, and it behaves more like maybe small caps in a lot of cases. Anyway, if that is enough of a preface, then slow down. Maybe what did you learn and what did you use and how did you come up with some of the decisions for your trading?
Sure. So I guess like first off, what I learned, I guess my key takeaways from that is like, it's not so much about the new information I learned, but kind of the reinforcing of some concepts and ideas that I already believed in. And that's valuable in its own way to me. I don't know the first thing about trading Bitcoin. I don't know any key levels. I don't know the best times of day to trade it. I don't know how large the average rotations are or daily ranges are. And that was kind of fun. So it basically allowed me to enter the contest without any preconceived notions. I just looked at the chart, looked at the order flow, and either got involved or I didn't. I'm a fan of the Wyckoff stuff, obviously. And although there's a big pattern aspect to it, fundamentally, it's all kind of created on human psychology. And I noticed on day one that was pretty transferable into the BTC USD market. I guess I noticed my lack of experience with the instrument meant that my expectations were completely different from trading futures. Because it was a sim, I didn't overthink it. I didn't try to reinvent the wheel. I just traded it like I would any other instrument, like the ES or the NQ. I looked for patterns to be supported by the order flow, thought where are people going to get stopped out, where is an area for reactions. You know, it kind of reminded me, when it was all said and done, it reminded me of that quote, to know is to know that you know nothing. And, you know, I'd like to believe at this stage of my trading journey, I'd like to believe that I'm on the path to knowing that I know nothing, if that makes any sense. In terms of like the results of the contest, after the first half of the competition was over, like when we did the first content award, my profit to share ratio was something that I was pretty proud of. Like just like you were alluding to with Stephen, that's what I was really focused on, was profit to share ratio. I was trading the Bitcoin as if I was trading my own small account. So I was taking like pretty small risk, and everything was working out great. Like then I kind of took a look at the leaderboard after a while and realized that if I was going to continue trading this way, I had no chance at reaching the top at all. So because I was trading like half of a single share for a while, I was risking $100 here and there. And in a strict P&L contest, there were people trading, you know, 10 times the share size and volume as me. So about halfway through the contest, I completely flipped the switch and went from trading, you know, very small share, short time frame, to larger share, higher time frame. And I was looking at taking the exact same setups and the exact same patterns based on the same kind of psychology, and just letting the trade run, sometimes overnight, sometimes for 6 or 8 hours. I enjoyed the 24-hour market. It was kind of fun for a bit. Ultimately, like, this is where I got a little annoyed, because I was having trouble with the actual sim itself. It kept closing out my positions, my longer term positions, without hitting stop losses or profit targets. It would just kind of randomly close on me. And so after that happened a few times, I kind of lost interest in the competitive side of the P&L. And I just went back to trading the futures market. You know, and that was just my experience. So when I was behaving as if it was my own real money on my usual time frame, I really enjoyed myself in the competition. And then when I decided to swing for the fence and, you know, kind of open up the time frame, I just had a few issues with the sim execution and stuff like that, and that kind of sums up my experience with the contest.
Okay. Yeah. I mean, it's an interesting point. Like, with, you know, evaluation accounts. I think Donkey Face had talked about this in his webinar, which, by the way, we'll do another webinar with his trader psychologist. So that will be announced soon, or we'll put a date on the calendar, guys. So look forward to that. It will be kind of reminiscent of Scott Pulcini, along with Brett Steenbarger. You know, just not quite at that performance level, but anyway, I can't wait. But the evaluations and the this is what Donkey Face was saying about, like, you trade a valuation account differently. You're going to trade a competition differently. So yeah, that's even Stephen had mentioned that as well. So you realize pretty quickly, oh, okay, I've got to go kind of all in, and you know, try to hold it, type of thing.
Yeah, I mean, I think the biggest takeaway to me, to be honest, is that, like, my strategy and mindset and system were working fine in this market. You know, like, everything, I just basically took exactly what I did, what I normally do, and I didn't overcomplicate it. And sure enough, when I was trading that style, I was having quite a bit of success. And I enjoyed myself. Like, I enjoyed the contest. I enjoyed the challenge. It was fun to be able to click a button and load, you know, 24 hours worth of data into your machine and look at kind of previous swings and all that stuff. And yeah.
I found similar concepts. The impulse and reaction setups were working great, but I only had 2 days, so I wanted to try and go for a scatter shot approach. So I tried literally everything I could think of. I have like 50 images of stuff for the competition that I did with like Fibonacci retracements and extensions, because a lot of people use those. I looked at anchored VWAP strategies as well. Those were working great. Higher time frame shorts were not working great because I feel like one of the struggles is because Bitcoin trades all the time. There's a lot of liquidity that comes in and out of the markets, and the higher time frame setups that I was using don't translate directly well from equities and index products, which don't trade over the weekends as much. And so those are some of the areas that I kind of ran into with some of those transitions. But overall, I mean, the core strategies were working pretty well.
Yeah, I mean, slow down. If we look at this image in particular, like, this kind of reversal pattern here, it took several hours. Now, you're not necessarily, I mean, typically you're not holding several hours or waiting for a pattern to develop several hours in futures markets.
No, I mean, I would like to pretend that I do, but no, I don't have that kind of patience or stomach. But this one was more like I said, the limit orders weren't working and the stop losses weren't working in terms of executing. So it was a lot of like, I'd set alerts on TradingView and just kind of come back and either take the profit or not. And I found like over the weekends, for instance, like the price was moving pretty slow. So I basically took the exact same concepts that I would apply on a shorter time frame and just kind of extrapolated that out.
I had a ghost trade that was lingering that I couldn't do anything with. I ended up fixing it by flattening, but there was no actual trade, and like you couldn't see any P&L or anything. So I did have like one of those issues at some point. But one of the other things that I noticed is when you're looking at just Binance, that's not Coinbase or any of the other exchanges. So when you're looking at some of these higher timeframes, you need to have all the tickers essentially. And I loaded these all into TradingView. So I was looking at once I started looking at the actual extremes from all of the exchanges, I was able to get a little bit better entries with some of the different setups. But by that point, it was kind of too late to kind of fix things. But yeah, Coinbase was trading, like 100 points higher than Binance was at one point, right? And due to slippage there and fills and volume, it was very, very messy. That's one thing that I think crypto kind of lacks, is the cohesive best bid and offer.
Yeah. It's unfortunate that we have the multi-book product, looking at 3, 4, 5, up to 5 exchanges, but it doesn't work for the competition because the fills will be all over the place. We don't even know what exchange you're going to get filled from. So in the competition, it was Binance futures that we accessed.
But I mean, that's just the difficulty with using crypto. But I mean, crypto's free data, so it allows people to kind of like get into the markets and stuff. It's just, you need to know the limitations of the markets. So that's really what I spent the bulk of because I only had that weekend to look at things. That's really what I spent the bulk of the weekend doing, was like, okay, if I'm going to look at this, I need to explore a lot of different avenues, and I need to treat it like paper trading, where I'm taking trades, documenting the trades, and then tracking them over time, and tracking the different strategies across the different exchanges, and trying to figure out what works and why it works, as opposed to just kind of like fixating more on my bread and butter strategies. I wanted to try different stuff. And that's one of the advantages of competitions, is you can try different stuff.
Yeah,
you can see if things are working different in different markets. And I found a strategy, and I was talking to David about this, and I actually executed it yesterday in the indices product that I found from the crypto strategy, and it's a modified ATR approach, looking at a swing high and taking an anchored VWAP entry long on a break of that anchored VWAP. And it so far has a very, very high win rate. It's a scalp style strategy. So you're in crypto, you're going to get 50 to 100 points, but in ES, you're going to get 1 or 2 points a lot of times. But 1 or 2 points isn't anything to shake a stick at. You know, that's $100. So.
Yeah. Stan, any comments in here? Like you and Slowdown were, well, all three of you guys and Steven just kind of churned it out. And just it really did seem like you guys were just doing what you usually do, just kind of a higher time frame.
Yeah, I was more choosing my entry on high time frame, but as they said, it was quite difficult with the stop and limits that were not working, and yeah, with competition you have to take big leverage when you see the first one. Yeah, but I think you said quite everything about it. I just try to enter on on big conviction. I will send you the screenshot. But yeah, that was fun.
Yeah.
I tried like my normal pattern, but it wasn't working as good. I think the week of was maybe more working than mine kind of setup of breakout. But overall, taking advantage of the higher time frame make me take the 4th place.
Yeah. I mean, so like there's like the kind of like what did you learn there? Like Stan, like in the beginning, like how did you pivot? Because this is, and why I ask this question, and why we're going through this in the Bookmap Academy meeting, is because this is what we can learn from when our strategies aren't working. What is our reaction?
Yeah, so I just cut it the first time and took some 1 day off, and then I tried just to look like bigger, taking advantage of maybe like when you have a big shadow into high liquidity, taking top and strong seller gaming. I try to follow the conviction, and I was working too on the side, so I couldn't stay front of the screen and making and keeping like what I usually do about my breakout. So yeah, I try to take some times.
So, I mean, you would take a position and step away for several hours.
Yeah, exactly. Yeah.
Yeah.
And so at the beginning, I get like a really good surprise with the stop and limits.
One of the things that I was doing is kind of like I was using Bookmap to kind of take a position, and it was Saturday, so I had to go to Home Depot and do a bunch of dad chores and stuff. But I would document where my entry was on TradingView, so I could check TradingView mobile, and then if I didn't like something, I was remoting in, and I could remote into my computer with my desktop remoting app, and I was able to like adjust stuff. So when I found out that the limits weren't necessarily working, and I was kind of upside down quite a bit all of a sudden, I was able to use that to kind of exit my position and stuff. So it was kind of rough. What would have probably been better is taking a look at the web platform that Bookmap has that works really well for like crypto stuff. I probably could have done a little bit more with that. I think that would have been better. That probably would have been a little bit more optimal. And a lot of reasons. So when we're talking about limits and the orders not necessarily working, this happens in paper trading a lot, especially when something's like multi-exchange, right? And it's because the volume on that particular exchange might not transact enough to trigger a true entry. So the application is not going to register it as an entry. However, there's clearly enough volume across all of the exchanges that that entry likely would have transacted, because they're kind of arbitraged together to some degree within Bitcoin. It's not perfect. That's why we have some of the bigger swings. But this is not necessarily a problem that's unique to Bookmap. This is slippage in and of itself with paper trading, and this is why you practice so much with kind of paper trading and doing different kinds of things, and that's why the competition is kind of essentially paper trading. So when you migrate into those live environments, you have that experience and you know what you're looking for. So.
Yeah, I mean, Slowdown, very clearly, his approach was to hone and perfect his strategies.
Yeah, his existing strategy.
Yeah, and
I can't stress enough. Like, my biggest takeaway was just that what I was doing in the futures was working when I did it in Bitcoin. I just did it on a different time frame.
Yeah.
Like I said, I didn't try to reinvent the wheel. I didn't try to invent my approach. I just zoomed out, and that was it. And again, until I started doing like overnight swings and having the trades close out on me, my profit to share ratio was actually quite respectable, and I was proud of just applying everything I had learned and developed into a different market and seeing it's possible. And like, I know Stan said he had to kind of make pretty big adjustments to what he was doing in order to be successful. But from my experience, it just kind of worked.
I mean,
I took the completely different approach. I just went and did different stuff.
What did Slowdown know? I mean, or all of you guys, like, what did you think about these markets and its relationship to liquidity, for example? I mean, I'm curious, or what kind of distinctions did you see between the way you look at the regular markets that you trade?
The lack of cohesion in an order book is detrimental to trading. The fact that I have a screenshot and I can share it in a second. I have to dig for it. I checked 7 different exchanges, and at any given time, they were at 7 different price levels. And the way that interacts, it can drastically trade if you're going to trade from like a larger time frame and you're narrowing in, because you could mess up where you're going to be. Slowdown's strategy is really great, right? Like, because it's a spring style strategy, so he's looking to kind of enter in an existing move, like in the middle of an existing move, and take continuation from it. But if you're like trying to do more of like a pivot style strategy, you can have a lot more problems, because you're not necessarily going to get your pivot the same way because of the way the liquidity and exchanges work. I checked volume on Binance at one time, and like only 3 coins traded, like 3.2 coins traded there, but like 180 traded on Coinbase. And that can really drastically change how you're going to approach things and how you get fills and stuff.
Well, yeah. Also, just I don't know if you were looking at the same instrument or not. I mean, like USD compared to USDT is going to be very different.
Oh no, it was the exact same instruments. Yeah.
Okay.
It was the exact same instruments, just on different exchanges.
Okay. Slowdown. What did you think? Like, because like look at this relationship with liquidity.
Yeah, like, not to sound like a broken record, but I mean, I just kept it simple. I looked at, when I first loaded up TradingView, I noticed there were, like Jack said, a lot of different options for BTC USD, but I looked at them all, and they were all, like, to me, they were close enough, and especially if you're looking at a higher time frame. So I picked one, and then I opened up the instrument on Bookmap, and I just looked at it, and I didn't concern myself with what everything else was doing, and I zoomed out, and I thought the liquidity had huge reactions. I thought it was really easy to kind of predict, not necessarily where something would reverse, but where you would get a reaction.
Yeah.
I found it easier than the ES a lot of the time. And again, that's zoomed out quite a bit. So I thought it was, like, pretty straightforward. And, trading's not easy, but it's as complicated as we're willing to make it. And so my approach was to not overcomplicate it and just trade the chart that's in front of me. And for better or worse, just trust the system.
So I included some of those. I included the image to you, Bruce, if you want to pull it up. And it shows that the different exchanges, the levels that are at highs and lows, and that the OHLCs essentially are drastically different between the exchanges. So when you're kind of looking at those, each one of those lines is a different exchange. And you can see that they deviate quite substantially at any given time. But to Slowdown's point, if you're looking in some of his spring patterns, and you're looking for those kind of already consolidating and then breakout style trades, the market has consolidated at those points very, very well. And you get those tight markets. So then when he gets that extension, he's with liquidity at that point. Like all of the exchanges are together. And when you have that culmination of all that liquidity, it's a very, very strong entry for him. That's one of the failures of the strategies that I was looking at, is I was looking at higher time frame extrema. Now, when you're looking at that and you have these deviations between the different exchanges, that can impact your trading style drastically. So if that's your strategy, you're going to want to be aware of it. And in the future, if you want to use these kinds of strategies in competitions, you want to be aware of those kinds of concepts. So right tool for the right approach kind of thing.
Yeah, well said. Let's see, slow down. I mean, since you and Steven both put together a really nice kind of Notion file here of a lot of images, and I mean, just some really nice documentation and journaling here. You've got the date, you've got what kind of trade it is, and you've got it down here as a tag as well. Is there anything like, in particular that kind of stood out to you and that was like, wow, that was pretty cool? I learned something really big from that. Any sort of kind of moments of epiphany, or I don't know.
Yeah, I mean, I guess like it was really reinforcing concepts I already believed in. And like, one thing I remember I heard Tom say a long time ago is that like the tools we use to interact with the market will always be changing, but what doesn't change is people's behavior and their psychology. So I just looked at it and it's like, if it looks like a hit you over the head short, if everything looks so perfect for a short that everyone in the world's going to see it, it might not be a short after all. And you let the stops get picked and you wait for the reaction. And time and time again, it was just waiting for the reaction at levels that looked like they were going to be interesting. Like there's another one right there. Like look at the liquidity on there. Like if you look at that screenshot and can't see how the liquidity could play into the path of price, at least for the first half of the screenshot, then like I don't know what to tell you. I mean, it's pretty clear. And regardless of what was happening on the other exchanges, this one was reacting to what was in front of us. So, I like, sometimes I cut my trades at profit targets and it keeps going on, but I've learned to live with that a long time ago because, I watched that thing you did with Axia Futures, the replay, and it was really cool. And they showed that slide where they're like, here's the outcome if you have a stop, and here's the outcome if you have a stop and a target, and here's the outcome if you don't have a target. But like, without having an exit context, I found that was like kind of disingenuous information because you're just basically taking the MFE off of every trade that hits. And if you don't know when to exit, you don't know when to lock in the profits, then it's like, the trade's not a winner until you close it. So, sometimes I just kind of like, I just take what I can get. And sometimes it runs past me and I think, oh, maybe I should reframe how I looked at this and see if I can find a reason to have stayed in it. But otherwise, I just I try not to beat myself up with it and I just move on to the next trade. And,
yeah. Wow. I'm getting overwhelming feeling that it was just kind of business as usual for you. And which is, I mean, fantastic to hear. You didn't really change. It more confirmed the way that you trade, and
Yeah.
just higher time frames, basically.
Yeah, like the whole Wyckoff thing. I mean, like that guy died 90 years ago, right? So like he was trading a different world, and yet a lot of the concepts, although they're pattern based, they have a lot of psychology in them, and like it's all still kind of ringing true. 100 years later, we can. I'm sitting in a farm in the middle of Canada, and I'm trading with people in Chicago, and who would have ever thought that was happening? But the psychology and the reaction to levels is still occurring, and yeah, it kind of just gave me more confidence to just keep doing what I'm doing and get better. I'm not perfect, and I'm far from it, and I'm not going to pretend I short the tops and buy the bottoms or anything like that. But every day, every week is an opportunity to get better and more focused and just continue down the path that's really resonating with me. And so all in all, I think the content contest just actually instilled confidence that what I've been spending the last couple of years working on is transferable to other markets.
Yeah, great. It's really great to hear. So yeah, I mean, there's nothing really more to be said. I mean, like you found your way, and now it's just kind of honing and refining. Yeah, you believe in the strategies and the edge that you have, and this competition helped confirm that. A totally different market you've never even traded before.
Yeah, I enjoyed the contest. If I did it all over again, I just would have started with substantial size right off the beginning and stuck to my strategy. But
Yeah.
what I took away from the content was different than just than leaderboard stuff. But
Yeah. No, it's one of the things I think in that Axia, that Axia video or webinar that we had, or they had, and then we were lucky enough to be a host or a guest on it. What they were covering, I think, with that trading with no take profit, is something we were kind of discussing a little bit in today's or this week's webinar. Monday and Tuesday was outside days, because a lot of what they're looking at is they're looking at news, and then they're looking at the reaction to that news, and that's a clear market mover. So on days like that, they don't know where it might go. It's not, I mean, it will probably hit a technical level at some point somewhere, but it might keep going. And for that reason, I think maybe they should have mentioned that in there. Like those that are trading without targets are looking for these big days of price exploration.
yeah, and I went back and looked at the slide again, and there is no metric for when to exit the trade. So like in terms of measuring to like a quantitative outcome, the more parameters you have established, the more accurate your measurement's going to be. But if you leave one end completely wide open, then you're going to and believe me, I understand that having a profit target is not always the most profitable strategy, but also never having a profit target and then it just didn't work for me. It didn't work for my mindset or my psychology. Like today, for instance, who thought the market was going to drop 100 points from when it did? I closed out my short at a target that I was happy with, and then I watched it drop, another 40, 50 points, took one more short along the way, got out of it, was happy with that, watched it drop another 20 points. And if I just took that initial trade with no profit target, who's to say I would have got out at the bottom? To me, it's kind of like ultimate hindsight analysis. And it's great. Hindsight's a great place to learn and improve from your mistakes. The trade that you've just opened up here, is an example of me capping a trade way too early, like, and closing it out and costing myself a lot of profit. But really, the real impact of this trade comes after it's already been closed for 5 minutes. When the high volume kicks in on buyers, I'm already out of the trade. So I can look at this and say, like, this is a missed opportunity. But in real time, I was, I had no idea that volume was going to come in. There are signs, the support of the bid comes in after I exited the trade. All kinds of things. There was liquidity kind of acting as an upside resistance point at the top of the range. Like, it's all, like, in hindsight, we can look at this and say, like, oh yeah, I would have gone in at the bottom. I would have got out at the top. I knew this was going to happen. I knew that was going to happen. But as soon as I stopped trying to, like, treat myself like that and just was just more honest with myself and making the best decisions I can with the information I had at the time, then trading became more relaxing, and just kind of realizing that, like, you can only really make decisions based on the information in front of you. And then as long as you're flexible and open and willing to change based on new information you receive, then, then you can go about your day and be happy with the efforts you've put in. At least that's my thought process.
Yeah. No, I mean, completely. I mean, it completely makes sense. I mean, the logic is all here, like in this example. I guess you added to your short. Is that right? So this is a short here, and this is another.
No,
short
no,
here.
those were just circled, saying, like, testing the bottom of the range where the buyers broke out from a little to the left. If you see the first buyers in control tag at the left-hand side of the rectangle there.
Yeah, here.
Yeah, so right where the buyers kind of came in, sellers were unable to get us back below that level.
Right.
And so that's where I did the red circle, because that was an area of interest to me at the time.
Right. Okay. Yeah, and then so here's your long.
Yeah.
And makes sense. You're looking at the volume down here. You're looking at the volume in here, and you also note that not a great reaction actually on the buy side, but it still met at least your spring kind of criteria. And then, so I'm just kind of curious, like, why did you take it here?
Well, I think if I was to guess, I think at the time I would have been zoomed in a little closer, and the relative volume display of the delta, it probably would have looked like a slightly larger reaction from the buyers initially. And so, and then as you zoom out and you catch, the initial impulse on the left and the follow through on the right, it'll shrink down your delta bars. So I'm thinking between the liquidity and the lack of selling, I got in, and then once I got in, I looked down and I was like, it wasn't quite the reaction I was looking for.
Right.
But I'm far from perfect, and I think a lot of us, if we're honest with ourselves, if we actually, look at and isolate our trades, we can always find ways to improve and be better. And so, I would have loved to say that, like, I got in, a few, a little lower than I did, or I held that second contract because I knew we were going to get another certain volume. But, like I said, I was trading this as if it was my own money. And, I was putting about $100 on the line at a time or so. And so I was just trying to, figure out if this is something I wanted to do after the contest is over. Like, if I want to have a product that I can trade on the weekends or not. And, so, I think, like, I'm continually developing, and I'm looking back at these screenshots and looking for patterns of behavior where I realize I made mistakes and then try to improve on them for next time.
Yeah, fantastic. Let's see. So any other in particular charts that you want to go through?
No, I don't really remember them, to be honest. But they're all very similar to the stuff I post on a regular basis in the Academy Challenge, or in the Academy channel, sorry. So it'd be springs. I kind of have 5 or 6 trades that I take on a regular basis. And for the most part, these probably are all different versions of those trades on a higher time frame.
Yeah.
So nothing like really stands out as something I want to like brag about or demonstrate publicly.
Not looking for that, just that, like lessons learned type of thing. And you answered it. Yeah, I don't know if Stan or David, Jack, Stephen, if you have any comments on any of this, and maybe any anecdotes that you have trading this as well. No?
Yeah, but that was really fun. It was, I think, a great experience. I learned a lot that, and maybe not a lot of time to make the experience. I think if we have to generalize some of the traits and idea, for example, about like liquidity, how it acts, or even like with volume. It would be good to maybe have a longer competition.
Yeah.
That's my point of view.
Yeah. That's what we had 2 weeks and tried to align it with the March Madness basketball tournament. Because I mean, this crypto is in my mind madness too, but like up at $70,000 and and who knows where this thing is going to go. Okay, well let's see. Stephen, we've got some of your content in too.
Hello.
Yes, how are you?
Good, and you?
Doing well. Thank you. So, is there anything that you wanted to go over, lessons learned type of thing? Reflecting off of your trading activity and performance and takeaways.
Yeah, I'm quite proud of like what I achieved in terms of performance and all that. I would have to pin it to Bookmap's visual aspect, like with the liquidity, because that helped me like have the conviction to stay in with the trade idea. Yeah, and basically the same concepts that we learn, it all applies. Like seeing volume, the delta, the liquidity on the bid, or like buyers trading into high liquidity on the offer. It's all those elements that I've been learning that applied, and I kind of just used it. Luckily, I'm also I've got the patience to kind of hold the trade, so I actually went for some long runs. But initially, when I started the competition, I had some. I've never used the trading control panel pane, so I had like I made some mistakes. I also took like 2 or 3 losses, but luckily, when I had like a winning trade, the ratio was the win ratio, or like the profit margin, covered the loss. So yeah, it's I'm quite happy with my performance. But another takeaway is looking at Slowdown's material, how he trades the futures. That was also quite a good takeaway for me, because I thought that it wouldn't really apply, but it did apply, because he applied order flow.
Oh, I think we're losing you, Stephen. I don't know.
Hello? Hello?
Yes, there you are.
Yeah. Okay, sorry, I don't know what happened there, but yeah. So that was also quite interesting. Yeah. we had a bit of glitches with the simulator, but overall, I think we did well. There was a lot of takeaways.
Yeah, yeah. So, like anything in particular from the 5 images you have here that you wanted to go over, kind of lessons learned, or that you felt really good about, confirmed some of your trading methods, etc.
Yes. Well, the pullback trades, for example, with the higher lows, and the order flow also. Yes, I don't know why, but I'm like a bit nervous at the moment.
Well,
But
which image would you like me to enlarge?
Well, you can go to the flag pattern.
Oh, okay.
The first one.
Uh-huh.
Yeah. So we've got the consolidation, the breakout. You can see high volume with the buyers, the buy delta, and then you've got that pullback. We got the support with a higher low. I didn't take this trade, but I at least saw it, and it was. I just felt like this is good content to share.
Yeah, yeah.
And then you've got the skew, you've got the liquidity on the bid, busy bidding up. The same dynamics of order flow being applied in the crypto markets.
Yeah, I mean, it's I don't know, kind of it warms my heart. I have to say, like, to hear these things that you and Slowdown are discussing, and Stan, of course, as well. Stan always, of course, he talks about liquidity all the time. But the here, let me just bring it up here from our website and education in the Learning Center here. The market mechanics course, we put this together, I don't know, 5-6 years ago. And the market mechanics, like on all of these time frames in here, it just, what you guys are talking about is the same things that work regardless of the time frame. So, we talk about the bid and the offer, and like what makes the market potentially move. There's a skew in the order book, or it's the volume dots that really come in hand over fist and chew through all that liquidity. Whatever it might be. But this here, on a very binary scale, is working here on a much higher time frame as well. I don't know. I'm a firm believer in it, and it sounds like you guys too are kind of saying a similar thing, which is really, really nice to hear. I mean, the mechanics and order flow are just on a bigger time frame. I don't know if you agree or disagree on that, but I'm extrapolating that meaning.
No, I definitely agree. I actually have another slide that you can see. I drew like trend lines, and you can see the order flow playing out there perfectly with the liquidity below on the bid. No, I threw it into the chat. If you scroll up a little bit,
Chat.
and then you can see when I actually exit. Okay, I'll throw it in again.
Okay.
In
the Bookmap Academy chat.
Yeah.
Okay.
I'll
find it.
Just quickly open it. You'll see what I mean. I basically exited out of this trade like 2 a.m. in the morning. I was like dreaming about it, I think. I can't quite recall. But over here, you could see I exited out of my long a bit aggressive. Ideally, I would have liked to taken my profit target at the the long-term high liquidity on the offer. But you can see there again, like higher lows and yeah.
So I'm sorry. I just brought it up. So is this the image here?
That's correct. Yeah.
Okay. So walk us through again.
Yeah. So basically, I had a bit of like up and down, and I just like went to bed, but I did, like, I drew this afterwards when I did like a post review, and I was going through my slides, my screenshots. But you can see it here clearly, like there's that little red box, it's like consolidation, break above, and then a series of higher lows. You can clearly see buyers were dominating. But like looking at this hindsight, I wish I had like maybe entered at like that pullback there, and you see like a bit of a double top where you are at the moment. I mean, not a double top, a double bottom, and then and then the liquidity, the short-term high liquidity on the bid
This
at I
one,
think
this one here?
69. No, further up.
Okay.
But that would also be an entry. But like I got in a bit earlier because this is
This one or this one?
the
the-
second, so
on
the
the
second
right?
yellow circle.
Okay.
Okay, but this is hindsight now. That I'm, obviously hindsight. You wish you had done certain things, but yeah, you can see here that I'm just going through it. Like kind of trying to document like what I could have done different, or other trading opportunities. But again, higher lows. You can clearly see the delta, who's in control with the delta, and the volume dots. And then you can see the liquidity. Ideally, I would have liked to have hit those high liquidity on the offer, those two bands on the top. But because of the competition, I did kind of exit. I did exit a bit early, to lock in that profit.
Yeah.
Yes. So that's about it that I wanted to share.
Yeah, no, this is great. I mean, like, I hope people are finding this interesting. I mean, because here we have like, some really great performance, from these traders, and they're through this book. I mean, the Bookmap Academy, at least the spirit behind it is to document your trades, have criteria behind your setup that gives you an edge, and through your documentation you will develop your criteria, and then you'll start to, I mean, look at your chart, Stephen. You've got some really nice markups here, but do you know what your chart looked like 4 months ago? I mean, it was impossible to read. You had everything marked up. Now look at this. Like, it's really really commendable. And yeah, hats off to you. Like, really great. And that this here in the kind of the competition where, we're in the Bookmap Academy, we're sharing content, but now we're actually sharing a common trading experience, and then learning from it also altogether. And it is confirming the things that you have learned. And Slowdown said that many times just now. So it's I think, I like to say we're on the right track, right? Like, this is, how the markets work, and it is a crypto market, a very different market than we may be accustomed to trading. Yet this is how the markets work, and you guys are finding an edge through the criteria you're looking for in these market mechanics. So yeah, I mean, I don't mean to speak over you, Stephen. I want to hear more from you on these things. Like, like maybe your take profit here, like your decision there. Like, okay, hindsight, you want to lock in the profit, but was there something in here? Was there a measured move? Like, maybe it was this consolidation, and then maybe it's kind of equal to this one, or because clearly you saw this, and clearly you have the patience to wait for those things too.
Yeah, I actually waited a bit longer. But this slide I'm still busy with. It's just why I'm sharing this one is because of the time that I had to exit. I was a bit more aggressive. Ideally, my mentality and like I think it's a strong point. I can hold on to a trade. Like today's ES move, I wish I had held longer, but you know my rules is after 20 points I take out my target 4. My fourth target, and then it still went another 80 points. So, you know, but I'm trying to master the basics of, you know, like from start to the end of the trade. Once I master that, then I have other ideas to, you know, take advantage of like a big move that we had today, 115 plus minus points. But yeah, I applied what I've learned through the futures, trading ES, to crypto. And like I said before, I was actually struggling with crypto, but the Bookmap gave me an edge because I can see the liquidity and I can see it getting pulled and you know all that playing around. Yeah, but my style is different to others, but it's still I think we're all doing the same thing, just different ways of wording it.
Yeah, I agree with that. Great. I mean, like, I don't know, David, Stan, slow down. Do you guys have any other comments or anything you want to add?
Great charting and well done to everyone for participating, Bruce. And you can see in the chat their ideas of other competitions would be good. I think where this does highlight is that if I talk about trading, Bruce, you know me and my analogies as a bull sport, yeah, is how those skills that we've learned using and trading one instrument, whether that's futures or spot or something, that very quickly we can adapt and take those lessons and tune ourselves on another asset. And it's something that I've been doing over the past sort of week or two. I'll often talk about in the chat about getting bored with ES and NASDAQ and just then flicking through some of the futures I used to trade before, looking at cattle and other things, because those patterns that we recognize and we know, and the order flow and the micro and the macro are very much applicable to the other things that we can actually trade, which sort of spices up the week, so to speak. So yeah, no, great to see, Bruce. Thanks, and Steve and everyone else.
Yeah, I'm looking forward to adding others, but I think it's important to finish what I'm doing, get my framework of my trade plan completely. I use this analogy of a closed loop system, and then I can add in GC and NQ and all that. But it's still quite interesting to see how it applies on other markets as well.
It is fascinating, and once you've got access on your system to be able to, you know, come across these things again. I sort of talk about me, but back in 2016, I was looking at things like coffee. I wasn't actually trading coffee, but I was just looking at all these different breakfast commodities and so forth to see if there was something perhaps a little bit more easier to play with. Wrong words, but I think you probably know what I'm trying to say, and that's what I do. I've been playing back in with cattle because the market's not 24/7. It's only open for half the day, and that's it. So yeah, no, good skills. Well done, everyone.
Yeah. I mean, great stuff, guys. I mean, like, I wanted to host the or you know focus on the competition and lessons learned. Like I said, because of the shared experience here, and some really great performance too. So maybe that allows us deeper insights, and maybe what we'll do is like I think Stan was suggesting like a much longer competition, and to kind of hone our skills more, and also to you know confirm our strategies. So anyway, it's something that we can discuss or think about in the future. let's see. I know we've already gone over the time, and I just wanted to cover this. Thanks everybody. Let's see. Are there any other comments and or special news or anything anyone else would like to add at this point before we close up? Yes. No. All right.
For me, everything is good.
What's that, Stan?
No, I said everything is good for me. No question. It was a great one.
Yeah, good session. Good session.
Okay. Well, yeah. Thanks, guys. And let's we'll reconvene next Thursday and go through a lot more on what we typically do and feedback on your trading activity. Open the mic for you guys, and try to give as much coaching and mentoring as we can to each other. Thanks everybody. Thanks coaches. Thanks for coming. Thanks for participating, and congratulations to the winners. Anyway, we'll see you next time.
Thanks, guys. Thanks, Bruce. Take care. Cheers, guys.
Thank you.
Bye-bye.